Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again Frank Holmes. And I'm guessing most of you know who Frank Holmes is. Most of you who listen to this show on a regular basis certainly do. But we are getting new people on the show now with the gold price picking up and gold shares starting to make people a lot of money. There are some people that are starting to enter into this space that haven't been here before. So I should tell you that Frank Holmes is the CEO and Chief Investment Officer of U.S. Global Funds. It specializes in natural resources and emerging market investing, but it also, they have a couple of ETFs, and one is for the mining industry, and that's GO AU, Go Gold, GO AU is a symbol, and the other is for the airline industry is JETS. That's kind of a cute symbol for that industry, and thanks for joining me again, Frank. It's really good to have you with me again.
It's great to be back, Jay.
Yeah, it's. I suppose you down there in Texas, are you operating in the office, or are you in your home, or what?
No, I'm at the office, and we have a very small contingency. We have Plan A and B, so people can stay home if they want this week, in particular because there's been a surge. Otherwise, people come in the office, and I would say we have a skeleton staff in investments.
Okay. Well, anyway, I would like to just we want to get into both of those industries, the mining industry and the airline industry, and what your take is on those. But before we do that, I'd just like to get your general take on this tumultuous year, Frank. I think just slightly older than you, maybe a few years older than you, and I can't remember a year that's been more traumatic, more tumultuous. And I lived through the 1960s when the Vietnam War and the cities were burning and so forth. But this seems a magnitude more serious to me. What is your take on? We started out with, attempting to get rid of the president. Then we had COVID-19, and now the problems in the cities. What are your thoughts?
Well, I just think I've never seen it before. Such a collective group, both within America and outside of America, going after the president. I've just never seen it. It's just amazing. I never saw it with Bush. I never saw it with Clinton and Obama. But it's unprecedented that you have such a collective, no matter what he does, it's a sideshow of attacking. So I've just never seen it before. You're right, and it's just what it is. With social media has sort of changed that, and I think that we're seeing that he's being blamed for changing the media or whatever. But really, a lot of those rules, I saw it with Facebook, and they stopped all crypto mining advertising, and then they came up with their own coin, Libra. Yeah. So they're talking from their own book, and the fact that they have billions of followers, it's amazing to see what the political agenda is. But most important, Jay, is that I like to go back and have these case studies done and look at the world, and it really doesn't matter who the political party is. It's all about government policies, and government policies are a precursor to change. And so I think that we're in this next big wave for gold and gold stocks. And I think that remains very, very bullish for it. Some of the unexpected consequences of the COVID knockdown and everyone staying at home has been what you see is these new millennials. And something like 80% of the checks they received from the government during the months of March and April and May went back into trading stocks. And, we saw Schwab and TD Waterhouse make announcements that in the month of March they both opened a little over 600,000 new online traders. And Robinhood, which is to me the most fascinating because there's been a couple million going there. And for gold investors, if you go to the toolbar at Fidelity's discount broker or Schwab, at TD Waterhouse, it doesn't really matter. None of them have a toolbar that includes gold. but Robinhood does.
Ah.
And so we found out that in our journey with our JETS ETF, we had unprecedented growth during the month of March, April, and May, and it's been a blessing for me because I saw the ETF JETS have, and then all of a sudden, millions and millions of dollars started flowing into that, and it had a 70-day run of unprecedented fund flows of $1.5 billion into JETS ETF.
Ah.
And interesting, when Buffett at the beginning of March said he'd increase his exposure, by the end of the month going into April after his annual meeting, he had sold all of his airlines. Well, it didn't really matter because the millennials kept buying, and what happened was that they caught almost a 3-month basing in the airlines as they accumulated, and then the stock surged over 50%. So there was lots of negativity of them coming in, but so far I haven't seen, people try to write negative stories like they do about President Trump. There's the same type of negative stories of millennials coming in to speculate. And I think actually it's really healthy because an ecosystem, it has to have minnows besides the tunas and the whales and the sharks,
Sure.
The barracudas. It has to have a complete ecosystem.
Mm-hmm.
And I think that's very positive and constructive overall. We saw it also in going into GoAU, a growth as gold has been going up, more and more money going into GoAU through Robinhood. You can get that downloaded every day to take a look at those names. Mm-hmm. And we saw also an increase in the GLD, the bullion ETF, each day, just growing number of retail investors through Robinhood buying GLD and buying GoAU. So we're happy to see that in addition to JETS. And the number is 40,000 people came in.
Oh, wow.
The Robinhood through that almost 3-month run. Particular, you saw it in April and May. Those 2 months was the big growth in the number of people coming in before the airlines exploded on the upside. A lot of it was fueled by short covering, big short positions on American Airlines, and they announced they're going to expand their operation. But also what's really important is the use of a new data point. And every day the TSA produces a number of how many people they screen. Uh-huh. And, a year ago, it was running at 2.7 million people a day, and it collapsed to April the 14th, I think, to just under 90,000. Huh. And this week it's gone through 600,000. So we're up 6-fold in the number of people flying daily, which is, I think, really positive and constructive domestically. And it's so important because 1 in 15 jobs is airlines related. And what the governments have learned is that after 9/11 and after 2008, 2009, they weren't fast enough of reigniting the airline industry and getting people flying. And it's really important because it drives other jobs like Vegas. 90% of the people that fly to Vegas fly in. That's how they do it. Well, they have 200,000 empty beds in April and 300,000 people laid off. So all of a sudden, all flights are going to Vegas, and we're starting to see an uptick in people getting rehired in the workplace. So I think the government's done an incredible job of sponsoring the industry, and a lot of it wasn't really bailout money. It was another form of unemployment insurance by giving the money to the airlines so that they don't have to go rehiring, which is a longer process. Everybody was sitting ready, anticipating the turnaround to be able to go back to work. So these are being positive things during this breakdown that of the economy.
Mm-hmm. Well, those are some things that Donald Trump did, his administration did, and of course, he's not going to get any credit for anything. So that's just the way it is.
There's no doubt that's what it is.
Yeah, it is what it is. So, Frank, let me ask you then. I don't know. I haven't been on an airplane since March when we came back from our son's wedding in Oakland, California, back to New York here. and that was just in time because that's right after that is when they shut things down. I don't know if I'd want to fly right now. I mean, do you have to wear a mask the whole way across the country? I mean, I hate wearing those masks, frankly. Have you been on an airplane, on a commercial airplane recently?
Oh, I've not been, but I totally understand it because a lot of people aren't that clean, Jay.
Yeah.
And what's interesting for me is having jets is the largest airport in the world is public. It's in Turkey, Istanbul.
Oh.
And you won't believe what they've done. I mean, they are using UV, which kills 100% of the virus, for all your luggage. They screen all your luggage. And your passport goes into a screen that reads it, but it also has UV light, and it cleans your passport. And they have like Arnold Schwarzenegger masks on with people with glass, with dark faces on, but there's computer screens that they're walking around reading, and they can see body temperatures. And they're screening body temperatures so that people, if they didn't make the first test, they can see them. And also for people that it's automatically measuring if they're not 6 feet apart, and they walk up to them and say, please separate. And it's really for your protection and mine, because the serious thing is that a lot of people are not that clean.
Yeah. Well, I'd say, so you think that's going to happen more? I mean, this is a privately owned airport in Turkey. You're saying you think this is something we're going to see more of that technology in all the airports, or what?
Yep, I think so. And I think it's a whole thing to make you feel safe, and that you can walk around, and they don't want anyone going on an airplane that hasn't had they're going through that TSA. They can quickly do an infrared screen and just hit your forehead, and it's within 3 seconds, and they know if you have a temperature. Yeah. Well, darn, wouldn't you want to know if you're flying beside someone with a 102 temperature?
You've got to believe it. Absolutely. Sneezing, coughing, wheezing, everything else. Anyway. Frank, I see that your ETF Jets is up from I think around $12.16 at its low to, I saw $16.70 today. So it's made a nice run, but far below where it was before the COVID.
Oh yeah, it went from 30 down to 12, bounced to 21, and now it's going through that normal pullback. But what's interesting, Jay, on the 3 big case studies is that after 9/11, the airline industry jumped 80% over 6 months. And after SARS in Asia, 2003, the airlines in Asia jumped 120% over 6 months. And after 2008-9 meltdown, from March of 2009 till September, the airlines jumped to 80%. So there's lots of millennials that have done this research, and they're looking for that big move over 6 months, which is interesting that they're much more tech savvy and going back and looking at those cycles. But what you have to realize is that in those waves of surging, you have these incredible 10 to 15, 20% corrections. So it's not straight up. It's very, very volatile. The airlines industry has always been more volatile than the S&P and trades more like gold stocks because of oil. Oil is more volatile than gold stocks. It's by a wide margin. But as an expense, oil's so much lower now, so it's not having a big impact. But I think we're going to have to live with the volatility, and I think these airlines have much more upside because we're seeing more people fly.
Well, I'd say you would think so, but COVID-19 has to be taken care of, I would think, or at least people losing the fear of it, because that's part of it. But again, if you can, if you can put in some of these technologies to reduce the risk of it. But I honestly think also, I mean, maybe I get myself in trouble for saying it, but I honestly believe there's a lot of hype and maybe overstatement about how serious it is, because it's really older people, where people haven't been taken care of. In New York City, in New York State, our governor put old people, demanded that they go back into nursing homes when they were sick, and that was a disaster. Yeah, so Frank, would like, with the time we have left here, so you're bullish longer term on the airlines. I take it we can sort of leave it at that for now, because I want to ask you about gold.
Jay, it's a data point. The median age is 82. Anyone younger than that usually has other complications like lupus, high blood pressure, or diabetes. And for the black population, sickle cell anemia, they have that. They just because it's a blood disease, and this is a blood disease, are much more impacted. So I think that it's been mismanaged, there's no doubt, and it's been weaponized by politicians.
Yeah.
Tragic, but that's what it is. But let's talk about the case studies on gold.
Yeah, let's do that, because that's it looks like we're having some fun in this industry now, Frank. And GoAU. First of all, tell our listeners about GoAU, how it might be different from some of the other ETFs, the gold mining ETFs.
What I noticed was that the GDXJ, which is the bogey for me to beat, has all these juniors in it, and they just greatly underperform bullion. Like, let's talk about bullion. Bullion, since 2000, has outperformed the S&P by 2-1, and has outperformed Berkshire. And year to date, it's outperformed Berkshire. So I'll give you a long-term or short-term, it's outperformed Buffett, who doesn't like or believe in gold.
That's right.
And Franco-Nevada has far outperformed in the past decade Berkshire Hathaway or the S&P or bullion. So what we saw was that a lot of the constituents that make up the GDXJ have management which have done a lot of dumb deals where they diluted those important factors that bring in generalists. And they are revenue per share. Two gold mining stocks come together, and if you destroy the revenue per share, immediately those stocks get sold down. If you destroy the cash flow per share, so those deals have to be accretive, and they've not been, or they financed and went to develop a mine which had bad economics, and they never delivered the revenue per share, and those stocks got crushed. So something like almost 40% of the GDXJ's constituents had diluted the value factor. So I said, okay, I'm going to come with a quant approach. I'm only going to have a basket of 25 names, and as soon as the management does something dumb, they're out. I'll go down to a $200 million market cap, and then for 30% of the portfolio are the three royalty companies, because they just have a superior business model. Only Franco-Nevada, where they have $24 million of revenue per employee, or we want to own Barrick and Newmont, which have $600,000 of revenue per employee. Franco-Nevada is much more efficient, and it's outperformed over time Newmont and Barrick. So I want to have where you have 30% is always rebalancing each quarter. That's Wheaton, River, that's Franco-Nevada, and Royal Gold. And then it has the other companies. And what's interesting is that the Franco-Nevadas, et cetera, they look more like a Microsoft. They have this recurring revenue, the SaaS model, and they continuously pile cash. They have 80% gross margins. They have free cash flow. They have the capacity to increase dividends. So I like that model. And I like, so when we back tested this model, this concept, it outperformed the GDXJ 92% of the time on rolling 12-month periods. We launched it 3 years ago, and it's done that. It's outperformed the GDXJ year to date. From the lows in March, it's outperformed it, and it's outperformed it over the past 3 years. So I'm thrilled about having that model as a way to, screen and cherry pick these stocks every quarter.
Yeah, you've pretty much doubled. I see 1085 or something like that in March in the low. And I saw earlier today at 2069 or something like that. So it's been a good move for sure. But I think it seems to me we're just getting started here, Frank. But so $200 million market cap, that's what you say that's where you sort of draw the line?
I draw the line there for liquidity reasons, because as this product goes to $1 billion and I have 2%, I got to be able to move $20 million to be 10% of a company. So I have to be sensitive over liquidity.
Okay, and so because I know there's a couple of other smaller royalties and streaming companies that I have my eyes on. I'm just, I suppose they're too small at this stage. But anyway, I agree. The model is wonderful.
We own them, Jay, in our World Precious Metals Fund. So we own a lot of the down to new ones being created at 30 million market caps.
Sure. No, that's it's really exciting. Well, what do you think, Frank? What's driving this gold market? It's got to be just the money that's being pumped in to try to keep things from imploding in the economy, right? The Federal Reserve, negative interest rates. Is that the key? Is that the biggest driver for gold?
Well, I think
Negative real rates, let's put it that way.
I think there's no doubt that's what it is, and but there's other factors to consider. I think we have to take a look at the leverage in the balance sheet. So when I said the beginning of this year, gold could go to 10,000. You wouldn't have a war. You would have this unprecedented government spending, and to take this market to where it is now, it would take $10 trillion, and people snickered. And it looks like now, if you look at the previous cycle of 2008-9, they spent $3 trillion. $3 trillion the Fed balance sheet exploded to. Gold went from $700-800 range up to $1,900. So if you take a look at the amount of money being printed this year to deal with the pandemic, we're talking about gold going to $4,000 over the next 3 years. And what we have is synchronized 20 countries, the G20 countries, are synchronized in their taxes and regulations. They're synchronized now in the bailout of their economies with the pandemic. And so they're all organized at printing as much money. We've seen now $52 billion of the Fed going into corporate bond ETF. It's unprecedented.
Yeah, that's crazy. Yeah, so that's really crazy.
So Frank, gold trades much higher, and I think a lot of the gold CEOs are much more disciplined
than they were before. Okay, Frank, with just 30 seconds left here, what about oil? Because oil is such a big driver, not only for your airlines, but also for the mining industry. What's your outlook for oil with 30 seconds?
It's just a trading vehicle. It doesn't have the secular trend that gold has. If you're not long, you'd be wrong if you don't have a good exposure to gold stocks. And I think by Christmas, a lot of the speculative ones will start to be taking off. A lot of the juniors will start be lifting.
Okay, but oil itself will remain subdued?
It's a trader. It's all for trading. If it runs to $50, the frackers come in and they'll suppress it.
Okay, all right. Frank, thank you so much for your wisdom, your knowledge. Always refreshing to talk to you. You're a little bit more upbeat than some of my guests, so it's always good to have someone like you when times are not, they seem to be a little dark and gloomy. Thanks so much for being with us today.
All right, thank you, my friend.